Good morning. I'm doing good today, YouTuber. Let's switch to some charts here. So for those in the room, this morning I titled YouTube Warnings Ignored. Of course, meaning we've got our sell signal from our internals, and I always mention that they are rarely pinpoint accurate on the top side. But historically, they are not to be ignored. Earnings coming out, obviously positive, and markets like that, of course. And as more positive news comes out and pushes the market higher, market's always about what are you going to do for me next now? So, at some point, things pull back, and internals tell us that things have moved historically to an extreme based on breadth and sentiment. Take a peek at them here, as they became a little further so yesterday as far as sentiment goes, pushing up into this upper area, these bands, and above 0.80. And then, breadth picked up a little bit, but it was nothing special yesterday, meaning it didn't push higher. So no change, just a little further pushed into the extreme. And we've got yesterday started out slow. It was really, choppy. And then eventually, as I guess the markets did not pull back at all, buyers gained confidence and they went higher. So now it's up a little bit here this morning. It's just chopping around here after pushing up overnight. European markets up, and it followed suit. And so now what we do now? Well, as always, it's got to be a systematic approach. And at new all-time highs, looking at the S&P chart here, it's like, okay, next destination should be the next whole number there, 4,600. We'll see if that happens. The downside, which should be limited, but as always, prior day's low is our first reference point of support. As you can see, it has not violated a prior day's low since the move started from this head and shoulders type of bottom that we talked about, speculating about at the time whether that would actually set up. Because as this was moving down with lower highs and lower lows, we're looking that it would go lower, and then it held, and the igniting bar up and up, up, up. So yesterday's low, first reference point of support, it's a wide range bar. Is it wide enough to be an ending bar? Well, you never really know, but it's really not that big of a bar compared to what ignited it. So I'm not so sure, but prior day's low being violated, whenever that happens, is going to be a change from what has been. Now, greater than 100% retracement, another concept in MTS that says, hey, be careful here. This is typically where momentum slows down, and it slowed down and then it just picked up again yesterday. So momentum slowing down isn't a reason to sell short after a move like this. It's a concept that says recognize historically that, look at what Steve is posting there. Pretty nice looking stuff. Coffee cups, charts, money. Getting creative here in the green room. And so now looks like you can go higher and uptrend on the 60-minute chart, and going up until it stops going up. Looking at, one second, go to the NQs, and they're getting closer to the prior high here, an obvious place where sellers are going to be. And just as they were here, right, we always look to the left, and it chopped around. It even topping tail broke a prior day's low and flipped right back up again yesterday when it held the support over here and just entered this little price void, which I can scrunch that up to see. Just chopped around over there, and now it's nearing this next area of congestion up there. And wider range bar, going to take a lot to break a prior day's low, considering, the wider bar. So what we do is just measure if it does begin to retrace, how far it retraces into this wider bar. As long as it stays in the upper half, we have a bias that it's still showing strength, and it should continue to go higher. Look at the cues so we can eliminate the overnight data. We see this little sideways move. So it broke the prior bar's low, sprung right back up again. Where are we here? 380. So gapping up a little bit, going sideways there. Could be a gap and go, because it's not a big gap, and we've got this correction pattern here. And it's kind of like a continuation pattern where it broke lower here and it sprung right back up. The gap isn't that big, but the congestion is right here. The question is, can it get through it? Well, that's the unknown, of course. But we know, well, on an intraday basis, I guess the potential move here could be considerable, getting up to the top of that. And of course, if it could take it out, we'll see. Again, prior bar is low, first reference point of support. Whatever happens today, so what if it gaps up and this just starts to fall? Well, the deeper it retraces and closes into here, it becomes a little minor breakout failure at resistance. So just brings us back to the internals that say long risk is rising. Be nimble, maybe put on smaller positions. But you obviously can play patterns like this on the long side with the knowledge that you're getting close to a point where selling is going to increase. Dow led the way down, just the slop, and leading the way up. And same analysis here. Hasn't broken a prior bar's low. Topping tail being ignored. That's bullish. Turned it around, and 36,000. It reminds me. Some of you might remember that. Been doing this for a while. Back in, I think it was around 1999. This fella, I think he's a professor at Harvard, Jeremy Siegel. Siegel, I think is his name. And just before the bear market began and the NASDAQ dropped about 95%, he said the Dow would hit 36,000. He's going to be proven right. And he's an older gentleman, but he lived long enough to see it. And so these predictions have to be taken with a grain of salt. NASDAQ dropping 95% back then was a horrendous bear market. All right. Yes, McGraw, I saw that. What a nasty, nasty reversal. I mean, that is the risk that comes with being an active market participant. I guess even on the short side of being in a bull market environment. But this was I would say, a near perfect pattern for a short. This big drop, which I assume was happening on the news that they were going to acquire that company, and it came down to support, and each attempt to try and bounce, it failed, and then a wide range bar down, breaking down, and then amazingly, this news comes out that they're not going to acquire this company, as if someone knew the chart and the ideal point to come out with that news and have the maximum effect technically with this type of a failure. And this popped all the way up to 53, taking out the top of this consolidation there, even though it's backed off back down to below 50 here. Yeah, patterns like this, when they fail, they tend to fail big because it's such a shock. Clearly, it was a pattern pointing to lower prices. Anyway, you're in the market long enough, it's going to happen. All right. Russell. It's working its way up to the top of the range. You can see here, we talked about this price action here where it was holding up. The moving average is getting tight. We covered that quite a bit over the last, week or two. And looking at the ETF, you can see that congestion there. And where is it? 230 and change. Well, not a big move up, but still it's tightening up. Look at all the overlapping bars and ranges here and how it tightened up. So just going back to our internals, and if today possibly be a turn day, no evidence of that pre-market, but as you can see, as prices get closer to areas of resistance, these type of little breakouts, they have a higher tendency to fail when the internals reach the extremes that they're at. So there's still room. This can go higher. It would just be amazing if you could get to the top of the range there. And just based on the way it's beginning to trade, it appears that that's a good possibility. Silver down a bit. Congestion, look to the left. Stall there. Gold. I'm not sure this is ready. It's just been so many false starts and stops and just all over the place. But, similar to the Russell, look how the moving averages are tightening up here. So maybe it is getting ready. We'll see. Oil has just been relentless. There's a strong uptrend. Lots of overhead room. And so oil stocks still look strong. Bitcoin down a little bit. Just hitting that prior high. I'll repeat it because I like to say it because it's true. Look to the left. You don't need any indicators. What could be more powerful than something that is so simple and you don't have to buy any esoteric indicators to figure it out? All you need to do is shift your head a little bit and see where sellers were before or where buyers were before, and then see if a pattern shapes up. And so this is in an uptrend and it's stalled. No reason to be thinking short, but reason to believe. And we can see the momentum is slowing down, and in an obvious place why it is. Transports look great, 16,000. Look to the left, whole number in alignment with that. Just another reason to be careful on the long side. Extended, right? It's had a big move. And it's interesting that it was able to get that far without, I need to press that, without airlines participating. Now they're down at support. It would make sense for them to have some kind of a bounce here. The depth of retracement, of course, is bearish, but it's been here before and buyers have showed up. So it's not a trend trade. It's more of, hey, this thing is likely to bounce a bit and we can see it if they do, and maybe they bring up the rear a bit. So that's just a thought. And I messed up this alignment of these symbols here. I'm sorting this by mistake. Yields coming in a little bit, not a big deal. And there. 10-year just coming down and down, breaking here, and graded 100% retracement here. And if the market should break a prior day's low, I suspect this will break a prior bar's high, and we'll see bonds retrace a little bit here, and that would certainly be in alignment with if the market pulls in, those interest rates, which gave it jitters of it moving up a bit too much, too fast, would be in alignment with a market pullback. So we'll see how today ends. We've got a bias as to what should or should not happen. We'll see how it unfolds. All yours, man.
Good morning. Yeah, the risk on trade is in full force. It's amazing. Volatility, just it's amazing. All right, AMBA here. There's a in the minder. It says it's up $1.75, but I don't see any prints. We're still long this. On Facebook, obviously, the big talk of town. Wow, look at that, gapped up, and it's right there at the gap fill. So that I think it had a $35 expected move into earnings for the end of the week. So the people who shorted options, that's a home run trade. It goes up, down, opens flat. All our opens are fine with one exception. It is Duncan. Greg already talked about, and I mentioned if you swing trade anything and you hold overnight, and unless it trades on a liquid market 24 hours a day that you can put a stop in, you got gap risk. There's no way around it. And then somebody might say, oh, well, why don't I permanently have a long put hedge to go on it? We can talk about that in great detail later. We did an MT Live on it called Is Option Protection Worth the Cost? So then you want to have a permanent headwind of, let's say 4% a month just to protect against a gap. It just doesn't make sense. It's too much of a drag. So 30-minute high for this for now. Everything else looks fine. I don't see any outliers. So Facebook, I actually like now. Remember I said yesterday, if it didn't have earnings, I would have done a put spread on that gap engulfing reversal with the 200 prior low. 30-minute high. Let's consider another put spread. Why did we cancel Deere? Well, Jim, we canceled it just because it ran too much and I was trying to get price improvement. But Jim, if you're in it, good for you. And here's what I mean by that. I actually, when I sent the alert in the weekend letter, I said, hey, do it for a limit. I wanted a limit, I forget, like $1.40, let's call it. And I left out the dollar and just put in a limit of 40. So technically, yes, it triggered. But then I immediately fixed it, and I was trying to get price improvement. As you can see here on the 15-minute chart, it never did. So good for you. No, I was watching it all day yesterday. It's one of my favorite setups. Diego, I have in my sights Dunkin' and Starbucks for a long. Dunkin', it's gapping to $50. It's not a, I don't know. It's gapping to the high end of the range. It's going to totally depend what it does in the first 30 minutes. If it was, so I don't know. I don't know, Diego. Starbucks. Yeah, I actually like this one better. Little gap pulling in right now. That's flat, 114.75. But over yesterday's high, maybe 10-minute high, we'll be waiting. See what the market does here, like we do every market open. Let me go right to gappers. There's some earnings. There's a ton of earnings, so I already went through and deleted a bunch of them already, just for time's sake. This WBX, beautiful breakout of an ascending triangle. But now, look at that, $11. It went up to 37. What's going on with that? But that also, to me, 99% looks like a SPAC. Oh, buck 85, so now it's range bound. I have no idea what it's gonna do. Remember this red box we were looking at yesterday? Look at this doubling here again, pre-market. That's some crazy price action. Tiger bottoming pattern, 1052, so I don't like where it's gapping, but bottoming pattern. Something we talked about. Low G has been weak for a very long time. Wow, look at this breakdown. Look at that right there. Wow, this is a beautiful example. It's textbook. This is exactly what we teach about a sell setup. You had a closing breakdown, which was fine to hold overnight, and then you had a sell setup at minor resistance 220. Here's another sell setup right there. Now it's, you know, dead into earnings and gapping down again. Email myself. See, that's how I build charts over time for MT Live. I see something, a great concept. Just I make charts all the time. I just throw them in there. CDNS gapping down 166. Could be a day trade shape short, 30-minute low. We'll come back to you. Now PCH. I see one print here is all. So unless pre-market is liquid, I don't put any emphasis on it. But if it is gapping under yesterday's low, then that's a bearish gap. Pets, animal sector, gapping down here. If it is gapping down here, 30-minute low, day trade short. MEDP, I see one print. We'll come back to you. TNAT, same. There's no liquid pre-market. You know, this was what we call a buy setup, a deep retracement, but it made the turn. TURN. I also see in my minder up 294, but I see no prints, so I don't know. GE was up, now it's down. This could, you know what? This could be a big inverse head and shoulders, but it got rejected every single time it tried to break out. But at least, you know, it's higher lows. So, and look at, remember MT Live on moving averages last week? Look at all these 3 MAs. That's worth watching. You know, and earnings could be the impetus. But it's, you know, not doing it right now. But, you know, on earnings, you don't know. The talk continues in the first 30 minutes. So Raul asking about KRE, banking sector, 1, 2, 3. Well, the 1, 2, 3 actually triggered they triggered yesterday, the 1, 2, 3. But you know, it's not too late. It's gapping up here. Resistance, maybe 30-minute high. Katie, this was a 1, 2, 3 continuation. I can't tell where it's gapping. Cade gapping down a little bit, no pattern, you're gone, bro. Now, bro, I was hoping it would be gapping up here 68 and change, because then that would be a gap and crack. Again, these moving averages with a 1, 2, 3 here. This was a beautiful entry down here in early October. Bottom right, Pelletier. Some folks were watching yesterday. Bottoming pattern. My AMBA alarm just went off. Not Amber, AMBA. Keep an eye on that. Put it in a window, actually. Keep it. ARE up too much at resistance. can't tell where it's gapping, but if it gaps down, then maybe 30-minute low. Thomas F slide. It's kind of a bull flag. It's worth watching. I remember we were looking at that in the green room yesterday. Stalled. It is a wide range breakout, but way too sloppy for me. McGraw STX may create put spread. I don't know. It's too far from support to me. For me, McGraw. GNC is a mess. You're gone. PII 117. Gapping way down here. So it's bearish gap with trading range. Xerox. Xerox was a bottoming pattern if it could take out last week's high, but now it's gapping under 20 bucks and has a price void. So 30-minute low. 30-minute low, Xerox, it's an idea. Let me put that in a reminder. CELH over highs. I personally don't like the way it trades. You know, it is in a trading range. So it's a top of the range, but you know, I personally prefer 1, 2, 3. All right, our AMBA did gap up, so let's move the stop under this pivot right here, plus a little bit. So how about 177.48? I'm watching Dunking. Our Piton. Oh, I already did move it there yesterday. Cool. Piton, we did a put spread yesterday. That's acting well. I'll tighten the stop some. Hey, yes, J&J looks good. This is bullish consolidation, Thomas, at resistance. So 30, it's, you know, I know it has a 200 right there, which is an alignment of resistance. So I wouldn't rush into it, but let's come back in 30 minutes and look at it. You know, Pfizer was trying to make the turn. What else was I looking at? I mean, Lilly, it's up a bit, but there's still a price for it, maybe the 250 and change. All right, so the gap's getting negated so far. It's only 931, so you can't